Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts. But first, if you're not already a member, go ahead and visit the home page of the website right here and you can become a better trader today by gaining instant free access. It's a 7-day trial and you get all of these member benefits, the trade alerts, continuous market education, daily precise watch lists, live market analysis with screen share and audio during certain parts of the day, and our professional and open, honest chat room. And all of this is 100% free with your 7-day trial. All you need to do is enter in your name and email address, and that's it. No payment information is required at all. All right, so let's get into these charts. So as I touched on the S&P 500 yesterday, we had 208 as support, and I suggested that we would head higher today, and that's exactly what we got. We got a retest of this 208 support, which I mentioned yesterday, and we got a bounce. We not only got a bounce, but we bullish engulfed the previous day's candle. We engulfed the previous day's real body of the candle. Opened below the close over here, and we closed above the open over here, so that is a bullish engulfing candle. We're likely to head to test this 210 level in the near future, most likely tomorrow. We still have this 208 as support and this 210 as resistance. If 210 breaks, then we can come up here and tag this 211.50 mark. And why is this 211.50 mark important? Because if you look over here, it was the highs of these two candles right here. I'll scroll back even more, and it was the highs of these two candles over here. So 211.50 is that next level of resistance. If we break over 210, that's where we're going to head. If we break below 208, the next support is at 207, and that's the level that we're going to tag if we break below 208. All right, that's enough for SPY. Let's check out what oil is doing. So oil here, I'm going to show a little bit of a longer term outlook here. Okay, so we've got this downtrend line that we broke over, okay, several touches over here, several touches over here, and we were getting rejected at it right here until today. We broke over it. We broke over this downtrend line as well as this resistance. So two birds with one stone right here, and we did so on a nice volume pop right here. So I'm going to zoom in a little bit so you can see it better. So see these highs over here, the highs over here, and then we've got 4 days of highs right there, and we had a nice bullish candle to break over this level. Looks like oil is heading higher. Next, I'm going to cover natural gas. Natural gas, we've got a break over this downtrend line. 1, 2, 3, 4 touches, 5, 6 touches right here, and then we broke over it with this candle, and we also broke over this resistance as well. We're coming back and we're retesting this resistance, which is now support. We got a nice doji candle right here at that level. I would not be surprised to see a little bit of a dip below, but I think that'll be a buying opportunity because we have this uptrend line support right here. Okay, we'll also, if we dip below there, we'll also be retesting the downtrend line that we broke over as well. So a lot of reasons to buy this dip down there if we get it, and even right here on this dip where we're at currently in the 690s is a buying opportunity in my opinion as well. So natural gas, I believe it is headed higher from here. All right, next I'm going to be covering gold. Gold, I'm going to look at the weekly chart. and looking at the weekly chart going back to early 2013, we broke over this downtrend line. We've got a touch here, 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 and a bunch of touches on the bottom of this here. So we had a bearish channel that we were in, and we finally broke over it right here. Now, looking at the daily chart time frame, what we have here is what I am calling a very large bull flag. So here's the pole right here. I'm just going to draw it so you can see it right there. There's the flag pole, okay? And then we've got the flag. We've got this uptrend line right here, and then we've got this downtrend line right here. And I believe that a break over this downtrend line will be the signal to that gold is ready for its next up thrust. Okay, so that's the signal that you want to look for. Break over about 120, 121 is going to be that signal for me personally as a break over this downtrend line. Just want to touch on a couple of stocks here. We've got Apple here. I mentioned before we liked it short up against this downtrend line. If you've been following along, you would know this. As I touched on the video I did yesterday, I do like Apple for a bounce, but it didn't quite get to my level for this short-term bounce, which is right down here, closer to 93. So I'm not saying we can't bounce from here. It's just not really the ideal level for me personally, as I see a lot more reason to own it lower down here, and it's a little bit lower risk. So I'd really like it to head down here before coming up here and potentially filling this gap. If we come up here and fill this gap before we come down here, I'd really be thinking that this level is going to break pretty soon after that next test. So I want Apple to be coming down here first before it heads back up. That would be ideal for me to get a bounce there on that level. I'm going to touch on Netflix really quick. Netflix, as I've been pointing out, we've got this break below this support right here. Okay, and that is the signal for Netflix to head lower. It hit our personal target of 91 for our short-term puts, so that was a nice score for our members. And moving forward, we've got the next big level down here is right around 88 from the lows of about 4 candles right here, and then we've got the highs of these candles right around 88 right there. So that's going to be a potential short-term bounce level. Longer term, it does look like Netflix is going to be heading lower, but I think we could be getting a short-term bounce down here, and then a potential retest of this resistance, which was once support at about $94, and I think that'll get rejected personally. All right, guys, that is it for the video. Remember, if you're not already a member, you can sign up on the home page. All you need to do is enter in your name and email address, and you can take part for free for 7 days. All of these features right here: profitable trade alerts, daily educational material, daily watch list, live market analysis, professional chat room, and an open and honest atmosphere. It's a great opportunity, and we'd love to have you.